recreational activities. There are no copays or deductibles, and it's covered through Medicare and Medicaid. Providence Elder Place PACE works to keep you healthy and in your home. Call 206-320-5325 or visit providence.org Elder Place. Providence.org Elder Place.
What's going on, world? It's your boy OG Mambo
and your guy D Money. Join us along with Pint Size Patron and ID Yourself
here on Fresh Juice at Rainier Avenue Radio
every Wednesday hump day from 9 to 11 Pacific.
Get exclusive interviews from your favorite artists, all the hottest music, and updates on what we got going on in the world.
That's every Wednesday, 9 to 11 p.m. on Seattle's Rainier Avenue Radio.
Rainier Avenue Radio presents All Music, All Day Saturday. Music, all day Saturday.
This is Edward Bailey, Bulldog Blue.
Jazz from the Cabinets.
That's right. It's time once again for Jazz from the Cabinets. Big Poppy.
Start Time.
Thanks for tuning in. My name is Paul. This is Start Time.
Saturdays, all music, all day. Reggae Hour, K-Fox Night.
Looking for the perfect beat? Yeah, it's the beat of the vibe.
Fresh Juice, D-Money and
myself, D Money.
Spencia, the Northwest Rap Game.
DJ Medina, Jackson, Northwest Rap Game.
Sergio Lacour's Love Line.
It's Sergio's Love Lines with Sergio Lacour. Go to the phone line. Tell them who we talking.
Sea Monster Radio, Mojang. It's your day.
Welcome to Mojang Mondays. This is KZ Music Media. Goddess for Mojang Mondays.
Just like God is inspiration all day and all night. Saturdays. RainierAvenueRadio.org.
Hey renters, have you ever had a landlord do something that didn't seem legal? Have you ever wondered if you have any rights as a renter? Well, you do, but it's not always clear what they are. That's why Solid Grounds Tenant Services offers free online renters webinars 3 times a month. Just go to solid-ground.org/RAR to learn more. This is a free opportunity to learn more about your rights as a renter. Again, just go to solid-ground.org/RAR.
This is Paul Pearson, host of Star Time. And when I'm not meeting Mrs. Jones in that cafe for a chat and nothing else, I'm listening to RainierAvenueRadio.world.
Hello? Oh, I can't hear you, Tina. I can't hear you, Tina. Is it me? Me? Daniel? Who can you not hear?
Yeah, can you hear me?
Oh, now I can hear you.
Okay, great. Yeah. Well, it's good to see you, Violeta. How are you?
Hi. Good. It's another lovely day here in the Pacific Northwest.
Yes. It looks
yesterday
like
it was kind of cold, but
oh, okay. Yesterday was kind of cold. Okay.
Yeah.
It looks like you're there on the beach.
Well, you know, I am going to be at this beach in December.
Oh, okay. Where's
Yes.
this at? Where's
Hawaii.
This at? Oh, God, nice. Okay.
Yeah. Yeah, my son's getting married. Nick's getting married.
Oh, my
so
goodness.
that's where they're going.
That's where everything's going. Wow. Okay. Well, I'm jealous. Okay.
Yeah. Anyway, I can't wait. I need a break.
Gosh, I know, don't we all? I was just talking about that, V. It is after Labor Day. This is our first show after Labor Day. And of course, this is where kind of vacations start winding down. Kids are back to school. College students are back to school.
Yeah.
And we start looking at the weather changes and, places like Hawaii for December. That sounds actually very good right now. But we're talking about, hey, it's now after summer, and classically summer is a really big time for people to buy homes. And actually, V, for Thanksgiving, that's also a big push. A lot of people want to get in to houses before Thanksgiving. And then Christmas, definitely people want to get into to houses during Christmas. So
Yeah, I don't know. It just seems to me that every time we've moved, it's been right around Thanksgiving, before the holidays.
Yes.
And then you're getting ready, not just for Thanksgiving, but for Christmas and before the end of the year and tax purposes, all that, right?
Yes, it's still a very, very good time to go ahead and, look at houses. I mean, if you get a house, you start looking for a house now, you can time it so that you close in October or the very first part of November, and you're good to go.
Yes. Yeah.
So, it's something that
it takes 20 days to 30 days to close a loan.
It sure does.
So there's plenty of time still.
There's plenty of time. So, what we're going to be talking about today are down payment assistance.
Yes.
And we're going to talk a little bit about earnest money. So, Violeta, I mean, a lot of people don't know the difference between earnest money and down payment assistance. So,
Right.
about that. So, now, Violeta, do you find that when you do have people at open houses or you talk to buyers that they don't really know the difference between the three?
Exactly. Yeah. And usually after I try to explain it to them, I go, here, let me give you Tina Lombard's phone number.
Yeah.
You need to talk to her because she is the money gal. She'll take care of your financing, tell you where you need to be, scrub your, your credit score, whatever it is that you need help with. Tina will help you. And all I know is, there are different types of down payments. What is the minimum down payment? What is the difference between that and earnest money? And I always say earnest money is that part of your down payment that is refundable to you. It shows how serious you are. It's a good faith deposit to that seller that you definitely want to buy that house. And here's how serious I am. I'm going to give you, say you're putting 20% down on a $500,000 home. That's what 20. That's how much is that?
Yeah, 100,000.
10,000, right? 10,000, 10,000. And then of that, I'm going to give you $5,000 in earnest money. That's how serious I am to get your home. So, then the listing agent with the seller will look and see what the best offer is. Yes. If they have a number of them. And so you can go anywhere from 3.5% up to 20% or more, depending on what you want to do with that mortgage insurance, right, Tina?
Right.
So maybe you can explain a little bit more about all that.
Yeah. So, when you do buy a house, there is money that you have to put into the pot. So a lot of times, a lot of people that they don't know how much money they need to put down. There's always a down payment. So you buy anything and, you buy a house, of course, let's say the house is $800,000. We don't want you to put some money down. We want to make sure you have skin in the game. Okay. The more skin in the game that you have, the less your rate's going to be, the less the mortgage insurance is going to be. A lot of things are better the more money you put down. So, you really want to talk to your lender. Sometimes there are loans like VA loans where there's zero down. There's some programs where FHA, they require 3.5% down. And there's some cases where people say, listen, I want to put 20% down. Now, by law, if anybody puts less than 20% down on a single family owner occupied, you're going to have to pay mortgage insurance. So what is mortgage insurance? So Violeta, if you only put, let's say 3% down on a house and you should default, the lender is just out of luck, right? But if you pay mortgage insurance so that if you should default, the lender actually can get paid. Right. That makes life a lot easier. And that's what's required of mortgage insurance. Now, if you have 20% to put down, then mortgage insurance is not required, because more than likely, if something should happen to you, the lender will be able to take back the loan and recoup the cost on the loan by selling your house. So mortgage insurance that is something that is tied to the down payment. But basically, just for our conversation today, down payment is what you have to put down to put skin in the game. So Violeta, I have some people, and they're like, well, I want to buy a house, but I don't have a down payment. Well, then you don't have a loan. You've got to put something in. Now, earnest money is different. Let's say that you do find a house. Let's say there are 5 people making an offer on the same $800,000 home. There's 5 people, okay? And so what you're basically telling the seller is, look, I'm going to put $10,000 down on this house. I right now, if I should default, if anything should happen, if I, for whatever reason cannot fulfill my portion of the contract, you can keep that $10,000. But I'm serious about this house, okay? Then the next person comes around and says, well, I'm going to only put $500 down, And then the next person comes and says, well, I'm going to be putting a whole 20% down, as earnest money. So basically, you're telling the seller, this is how much I'm interested in this house. You put $500 down, it's just not going to happen. A lot of times, a lot of my friends in Seattle, they'll put $20,000 down hard. Well, they say, we're going to put $20,000 earnest money towards this house. If something happens with financing, seller, you get to keep the money. Some people will put $50,000 or $60,000 down and say it's going to go hard. We're going to give you $60,000 earnest money, and if we don't fulfill our contract, you can keep the money. Now, of course, earnest money, let's say you do put 20% down, or let's say you put $20,000 down on an $800,000 home. When you do the financing of the house, that earnest money doesn't go to the seller. The earnest money actually goes towards your loan and the closing costs and everything else. So earnest money is basically you telling the seller, I'm serious about this house. This is my money I'm putting down. I'm betting on the fact that you're going to give this loan to me. So a lot of times, Violeta, you've got sellers and they're looking at 5 offers, and all the offers are similar, but one's putting $100,000 down, one's putting $500,000 down, one's putting $5,000 down. Which one's the seller going to go toward?
The highest amount.
Yes.
500,000. Is that what you said?
Yes. And the reason why is because the seller knows this loan is probably not going to default. These people have their ducks in a row. In 30 days, I'll close this loan. If you only put $500,000 down and somebody else is putting, $100,000 down, chances are you may not have your loan secured. That's what the seller thinks. And they're like, so if the client loses $500, so what? But if somebody puts down $100,000 on a home, the seller thinks, oh, okay, they're serious. They're going through this. They must have financing is complete and everything else. So earnest money is something that you put down to say, hey, Mr. and Mrs. Seller, I'm putting my money where my mouth is. I'm putting this much money down because I really want your house.
And that earnest money is due like 2 or 3 days right after the contract goes mutual with both parties accepting the deal. Yes. And then it doesn't get cashed out until the very end, but escrow keeps that money.
Well, yeah,
they let everybody know that, it's good. Money's here. We're good to go.
That's it.
Yeah.
That's it. And so, of course, you put the earnest money down, after you sign the contract and the earnest money is due, and you actually put that you send it to the title company or the escrow company, and they have it in safekeeping. So that's one thing. Earnest money is one thing. Let's go back to your house. Let's say you buy an $800,000 home. Let's say the closing costs are $25,000. It just, $25,000. And then let's say the down payment is 10%. So you got $80,000 plus $25,000. That's $125,000. Am I right? It's $105 coming out of your pocket, right? Okay, so down payment goes towards the balance of the house. So if you bought the house for $800,000, then you put down payment down. Okay, so now your loan is this much. So the client, you, the buyer, you're responsible for the down payment. You're responsible. Now you've got closing costs. You got an $800,000 home like this, but then there's $25,000 for the closing costs. For Mr. and Mrs. Buyer, you're also responsible for the closing costs too. So you're responsible for the down payment, whatever you decide that's going to be, and also for the closing costs. Now, a lot of times, I'll ask, or Violeta will ask the seller, hey, they got $20,000 for the closing costs. Could you pay the closing costs for them? Or could you pay $10,000 to the closing costs? Can you pay any of the closing costs at all? And sometimes the seller does not have to. It's not their obligation. The seller can say, yeah, I could do $10,000 towards closing costs. So now Mr. and Mrs. Buyer only have to put $15,000 down instead of $25,000. Okay, but you are still responsible for the down payment. Okay, so down payment, earnest money, completely different. We're really interested in the down payment. We really don't care about the earnest money. That's on the real estate side, right? So when you get your down payment, Violeta, some people don't have that 3%. They're buying a $500,000 home and they don't have $15,000 to put down towards it, and they certainly don't have the closing costs either. Okay. So in this situation, we have what's called down payment assistance. And this is for first-time home buyers. A lot of times you'll have, like for instance, if you put 3% down on a $500,000 home, that's $15,000. Well, the down payment assistance people will help you with that down payment assistance. Sometimes, they'll give you 4.5% or 5%, and you only need 3.5% down, but the extra 1.5 goes towards the closing costs. So a lot of times, if you are lacking a down payment, you've got the money for it, you've got the job, you qualify for, $500,000, but you don't have that extra amount of money, you can go to several sources to get down payment assistance. So, Violeta, I get a lot of people who think down payment assistance gives you the whole down payment. And that's not the case. It's down payment assistance. The key word is assistance. Yes. So most people have
it is due back at some point.
Well, yes. Now there are different places where they give you, let's say they give you $15,000. Sometimes they'll charge you, monthly for that $15,000, maybe $50 a month, maybe $150 a month. So sometimes they'll do that. There are some programs that are forgivable after 5 years. You don't have to ever pay it back. And there are some programs where it's a silent second. You don't have to pay monthly payments for the life of the loan. But when you refinance or when you sell the home, you have to pay it back. So a lot of times, a lot of places that give down payment assistance, such as Washington State Bond, there's different programs. There's there used to be Lakewood home buyer assistance. There used to be Tacoma down payment assistance, Lakewood down payment assistance, Seattle down payment assistance. There's all these different down payment assistance programs, and your lender can tell you about that. And Violeta can also tell you about that. If not, you can always give me a call. But there's people, there's like King County down payment assistance, there's Tacoma down payment assistance, but there are some national companies like Chinoa and different programs that are national. And sometimes the interest rates, like here in Colorado, we've got the Colorado Housing Finance Authority, and they've got a very good program. I just checked an interest rate today. It's 5.875. But the rest of the world is paying 6.8 or whatever for an FHA loan. The down payment assistance program is actually lower, and they give you 4%. So that's something that we have here. Also, Washington State Bond. I'm not sure what the rates are now, but sometimes these municipalities or these local authorities giving these down payment assistance, they actually make the interest rates a little bit lower. And one of the reasons why they do this is because they want you to live in Denver County, or they want you to live in King County or Pierce County, Summit County or what have you, Jefferson County here in Colorado. And they want you to pay them their taxes and everything else, but they do want to have housing. They do want you to buy in their particular neighborhood. So a lot of these municipalities, they will give you these down payment assistance. And what happens is you go to closing, you sign your papers that the lender gives you, and then you sign the papers for the down payment assistance. So, So, I mean, sometimes there are restrictions where, if you make $500,000 a year, they may not give you down payment assistance. You make too much money. Some municipalities have an income limit. You can't make more than 80% the average median income for that county, for example. You can't make more than $180,000. There's some places in Texas where you can't go over $180,000. There's some places where they have certain restrictions. Sometimes these bond programs won't go to a certain address. Like if you live in Lake Tapps, perhaps, or you live in Mukilteo, not every place has down payment assistance, but a lot of places do. So make sure, if you are going to rely on down payment assistance, make sure that you ask your lender the neighborhoods. So if you just go all willy-nilly and you're like, I want to look at these houses, and you try to get down payment assistance, and they say, hey, we don't lend out there. So make sure that you check with your lender and check with your realtor to see where, if this address or what addresses you can apply for housing, get down payment assistance. So, Daniel, I do have a link right there I wanted to show everybody. I don't know if you can pull that up really quick. And this is just a national link that I got from bankrate.com. But it asks you, what is down payment assistance? Down payment assistance programs are loans and grants designed to provide homeowners with money to help them pay for a down payment. Okay, so, and this is a right. I mean, you can't have the worst credit in the world. You can't come walking in here with a 480 credit score and demand down payment assistance. You have to be at least credit worthy. Believe you me, I get people all the time, and it's like, you've got to be credit worthy. So some cases they go down to 620 credit score. I do have some letters that do 100% FHA at 600 credit score. So there's ways to get around it, but that's what down payment assistance is. And please look at the word assistance. Okay, they don't give you the whole down payment, they give you assistance. Okay, if you go down a little bit, down payment assistance eligibility requirements, Daniel, go down just a little bit past all those banks. Go down right underneath that. There you go. Most down payment assistance programs are geared towards first-time home buyers or buyers with lower or moderate incomes. So we've got a program here in Colorado, where it's first generation. So if you live in Colorado, nobody in your generation has ever bought a home loan. We actually have grants here for people to get that. So there are certain requirements, like maybe if you make too much money, you're not going to get this loan. Sometimes they are geared towards first-time home buyers, but we do have plenty of programs where they're second-time home buyers. Let's say somebody bought a house and they want to downsize, they want to get rid of it, but they don't necessarily have the down payment. They can still get down payment assistance, even second or third-time home buyers. So please look for that. Okay, these programs are specifically for buyers of primary residence. So you don't get down payment assistance to buy an 8-unit duplex down the street. And we get those questions all the time.
Yeah.
These are for people, their primary residences. Okay, not investment nor rental properties. So depending on the program, you may be able to buy single family homes, condo, townhomes, or planned unit developments. So, if you do an FHA loan and it happens to have 4 units in it, and it is your primary residence, definitely you can ask for down payment assistance because that will qualify.
Do they also help you with closing costs?
Yes. So some of these programs here, like FHA is only 3.5% down, and some conventional programs are only 3% down. So some of these programs go 4%, or they give you 5%.
Okay.
So if you have to put 3% down and somebody gives you a 4% loan, you'll have 1 point to go towards closing costs.
Got it.
But I just want to forewarn everybody, you can't come in here with $50 in your bank account and get down payment assistance. You have to have at least $1,000 in most cases. That's after everything is said and done. So you can't. It's not free money. It's not free money. You've got to qualify. And sometimes, Violeta, I have people who've got $30,000 in the bank and they're asking for down payment assistance, and that's fine. That's absolutely fine because they want money to buy furniture and to buy paint the walls, whatever, or a safety net. So that's perfectly fine. If you do have $50,000 in an account, you want to do down payment assistance, look into it. It's not just for people who have no money at all in savings. So, but make sure, some realtors, they get in trouble. They ask for down payment assistance, and the client says, I only have $1,000. The client needs to bring $4,000 to close. And then the realtors are screaming at me, yes, down payment assistance, blah, blah, blah. No. And of course, if you buy a $300,000 home or $500,000 home, 1% is different in those different circumstances. So client, you still have to have money. You really have to talk to your lender. If it comes out that you still need to bring $4,000 to close, that's better than $21,000. Okay, so it's down payment assistance. So don't ask them, I got $100 in my account, I want to get down payment assistance. No, you've got to put some skin in the game. So it does help you. You've got to qualify, but you have to have money in the bank to make sure that you can actually pay these payments. You have some reserves in your account so you can make these payments. You should not default. So let me see here. So go down a little bit, Daniel. It says types of down payment assistance loans and program. Okay. So if you go down there are different, you want to scroll a little bit. There are grants. And they just give it to you. They're forgivable loans, but they give you the loan. If you can't stay in the house for 5 years, you can have it. Low interest rate options. Sometimes they're just $50 a month. Deferred payment loans. So the payments are deferred. And I don't work a lot with individual development accounts, but and I keep going down. It says lender down payment assistance programs. So I'm not quite sure in the state of Washington. I only have maybe one lender in the state of Washington where they will give 100% FHA, 100%. So they will actually do the loan for the 3.5%. But those programs, the interest rates are a little bit higher. But they will go down to 600 instead of 620 or 660. The lender will give you the down payment assistance. Okay. So, and down below that, it says how to find down payment assistance. You've got your state housing finance authority. You've got your city or county websites. You've got HUD. Your lender can find you options, and there are down payment resources. So a lot of times, thank you, Daniel. That's all I need from that. But a lot of times, ask your lender. Your lender, I know we've got like dozens of down payment assistance, and we look at credit score, we look at how much income they make, we look at how much they qualify for, what state they're in, what county they are in, and a lot of times your lenders will tell you what the down payment assistance programs are, and it works in our interest as mortgage loan experts to know what down payment assistance are available. So you don't have to go to Washington State Bond or knock on Tacoma County, Pierce County's door. give me down payment assistance. Your lender should be able to find you down payment assistance.
Okay.
Yeah. So, V, yeah.
Okay. So what if someone asks you, what's the minimum down payment that I need to put in?
Okay. So that's a very good question. I always tell people you've got to talk to your lender, because if you're pulling a 780 credit score and somebody else is pulling a 601 credit score, it's going to be completely different.
Yeah.
But just a classic, and V's asking a very good question. The classic conventional loans, only have to put 3% down if you're a first-time home buyer, 5% down if you're a second-time home buyer. FHA is 3.5, and programs like VA or USDA are 0% down.
Mm-hmm.
So, but always ask your lender. Don't ask the person that's at the water stand in your work. Don't ask your cousin down the street. Don't ask your neighbor. Don't ask your pastor. Ask your lender what the rate is and how much your down payment should be. And they can tell you, some people, it's like, well, I give you down payment assistance. You got $1,000 in your account. Let's go. And other people, it's like, well, you're going to have to put 10% down because your scores are like a 589. So rule of thumb, you need to talk to a lender.
Mm-hmm. What about a second home, vacation home, or an investment property? How much do you have to put down for that?
Classically, it's 15 to 20% for an investment property, non-owner occupied. A second home is usually 10% to 15%. The second homes actually was a hot spot for a lot of fraud. So it used to be only 5% down. Now they're going 10 to 15% down on second homes, because people going second homes getting the better rate than they're putting renters in there. So, I classically go 15 to 20% down investment property, anywhere from 10 to 50% down on a second home.
And your credit score has to be a minimum of what?
For investment properties?
For your first home or
this time. Okay, 660. If you go to the bank and you want to get a really nice, crazy rate, 660.
660.
But this will go down to a 580 on VA and FHA. And I always tell people, credit. Everything is based off of credit. If your score is under 680, a lot of the banks will not touch you. If you're 660, maybe you're lucky a bank will get you. But people like me, we can go down to 580. We can also give you the classic good rates with a 750 score. We can also do that. But your credit, your credit's the main issue. Pay your bills on time. Do not take out more credit than you need. Put your payments on auto pay. I get so many people who make a lot of money and they pay their payments when they want to pay them. And they've got 1 or 2 30-day lates and their scores went from a 740 down to a 620, and they get mad because they don't know why I can't give them a loan. But, make sure you got your credit underneath control. Make sure you get good credit, and do not go to creditkarma.com or anything crazy like that, because that'll cost you 100 points just out the gate. Call a lender. You can even call Equifax, TransUnion, and Experian and get 1 free credit report every year. But I can't tell people more enough. Your down payment and your interest rate depends on your credit score. So if you don't pay your bills, don't try to get the lowest rate. Don't get the lowest down payment. It's not going to happen. Get your payments in order, and you will get the lowest interest rate, and you'll get the lowest down payment. Bingo. Okay.
There you go. Mm-hmm. And then, how much time do we have? How about that PMI? How do you avoid doing that? Paying the PMI or the private mortgage insurance, right?
Yes. For a conventional loan, you have to have at least 20% down. For investment properties, there is no mortgage insurance. We just price it. Yeah.
Or VA.
Because we force VA. Yeah. And a VA doesn't have mortgage insurance either. So if you're a vet, you can go VA. USDA also does not have the same requirements. FHA, no matter if you put 5% down or 50% down, FHA will always have PMI. So I don't. PMI is a good thing. Sometimes people they put 20% down, the rate is one thing. And if they put 15%, 18% down with PMI, sometimes the interest rates are lower because that loan has private mortgage insurance on it. The mortgage insurance.
I read about a 80-10-10 loan.
Mm-hmm. Yeah.
Can you tell them about that?
80-10-10 means that the first mortgage is 80%, the second mortgage is 10%, and then you put 10% down. The only problem with that is the interest rate is a lot higher. If I can get a 75-20, 75-15-10, that's good too.
Yeah.
But a lot of times lenders won't do that second mortgage, 80-10-10. So that used to, back in the day, V, we did that all day long. Piggy. We call it a piggyback.
Yeah. But piggyback loan. Okay.
Yeah, now the second mortgage is maybe at 10.75. Your first mortgage is at 6.5. So do you really want piggy? I tell people put 3% down and get the PMI, because the PMI insurance is only $67 a month. That piggy at 10% may be $180 to $240. So just forget the piggy.
Yeah. Just do 20% down and you won't have to do.
No, just keep the whole first mortgage at 85% or 90%. Just take the whole first mortgage. Don't do the piggy, because the piggy it's a piggy. Okay, but piggy, the interest rates for second mortgages are much higher. So you'll have a 7% first mortgage and a 10.5% second mortgage. How much sense does that make? And then that payment right there may be $250, but mortgage insurance may be only $60 or $80 a month. So 80-10-10, if you're putting 30% down, you can do a 70-20-10 or something like that, but it just doesn't make any sense in some cases. But talk to your lender.
But Tina has so many loan programs out there, like loans for professional. If you're a medical professional,
Yes.
There's so many different types. What else? Educators.
The educator loans.
Music.
Yeah.
Daniel, thank you. That's a good sign. We gotta go. So thank you all for joining us today. I'm Violeta Strash, Coldwell Banker Danforth.
And I'm Tina Lombard with Novus Home Mortgage.
See you next week, 2:30. Bye-bye.